Hi, I'm Keith Vander Leest. I lead the payments team here at Crossover.
And I'm Declan Callisto. I'm a product manager here at CRB, working on our Bank Rails product.
What is network interoperability and what does it mean for faster payments?
Is basically the ability for two or more networks to work together to provide more value than either of the networks could do by themselves. We have in the US RTP and FedNow, and those two systems don't talk to each other, but if they were able to work together better, or service providers and financial institutions could work together to provide more of a combined solution, and you could see the value of both networks at the same time.
Why don't these networks work together without us forcing them to work together?
So these networks were developed at different times by different players in the payment system. RTP has been around for about 5 years in the US, and FedNow just launched last year. So because they were developed by separate groups, they're not able to send messages.
So they're inherently not competing with each other. It's just they weren't developed in tandem, and therefore someone needs to create a layer on top of them to be truly interoperable.
Exactly. I think a lot of financial institutions in the US look to leverage both of these solutions in their offering and how they're able to send payments. But to combine them into one offering, I think, is the real challenge that financial institutions are faced with.
So what I think is really exciting about the interoperable solution that we provided is that it allows our fintech partners to scale much quicker, go to market much quicker. One of the challenges is because there are two networks and not all the accounts in the US are enabled for both networks, the logic needs to be written. We've done that, and I think that allows more fintechs to offer faster payments. It's no longer product and offering just for the largest fintechs who have very large engineering staffs to build out this capability. We've done a lot of that work for them, and therefore they can offer this faster payment rail in the same way that they build a very simple ACH product offering. So I'm excited to see what will happen as more and more fintechs embrace faster payment.
So Keith, why would a bank want to build these kinds of products with dev teams in mind?
I kind of think, why wouldn't you? Why wouldn't a bank want to enable engineers to be able to build better and faster payment rails? The legacy payment system is 50 years old, depending on which rail we're talking about. Wire is even older. The friction that exists today in payments can be solved with technology. So that's something that is very important, and it's more of a question of why wouldn't we do this? Why wouldn't all banks enable easy to use, easy to access API endpoint? Why are engineers, why are the dev teams at FinTech, why are they gonna like this?
Financial services can be a little complex to a lot of dev teams because in the financial services space, some of these rails and the way things work under the hood can be a little difficult to fully understand. What we're doing with network interoperability in our API solution is really abstracting that complexity of two different networks where only a financial institution would have access to the sort of under the hood information, and making it a really clear set of API endpoints where you as a developer don't have to understand all that complexity, and you can really just set up a cool payment solution in your fintech app.
So you don't have to have a background working at TCH or the clearinghouse or the Federal Reserve for FedNow and able to offer this faster payment rail, integrate to it.
Payment rails are doing a really good job of sharing information between financial institutions to prevent that fraud. We've seen fraud negative lists we can participate in to make sure that certain accounts which are flagged can't be used on these rails, and we're seeing that be a real way to stop some of the fraud.
There's a lot of innovation happening not only in the actual payment but also in the way that fraud is managed. As innovation happens in payments, innovation in fraud and risk management, many of our partners are doing that themselves. They're moving money faster, but then they're also enabling fraud solutions for their clients. So it is an interesting time.
So what use cases are you most excited to see?
Well, I'm excited to see the expansion of use cases we've already seen. What is really interesting about what we've seen with faster payments isn't so much the speed. While the speed does provide a lot of value, the real value is the ability to move money outside of traditional banking hours. The fact that we still are stuck with 9 to 5, 9 to 6, Monday to Friday banking hours in many of our financial flows and our payment flows is kind of ridiculous when you think about how everything outside of our financial lives is 24/7, 365. So the ability to move money specifically in the middle of the night or on the weekends is what I'm really excited about and where we've seen the most adoption. That's things like gig economy, payouts, earned wage access, online gaming. All of those things operate 24/7, so why not payment? The other area that I'm excited is areas that have been traditionally check and wires. Checks still in use today and many B2B payment use cases. Card has not cracked the B2B challenges with payments. So I think FedNow and RTP and then the combination of that instant payment rail opening up a lot of new opportunities in B2B use cases. It is more about the speed with which the money is sent and the certainty. You don't have to worry about a bounce RTP faster payment transaction.